So, how's the year going to end, and will the UK funds be leading the charge in the West End? Q3, we saw our highest turnover on record at 2.4 billion for the 3 months. That takes the year-to-date numbers to 4.4 billion, which is 6% up on last year. And if you think for last year was the third highest on record behind 06 and 07, we're pretty well set. It's a very competitive bidding environment. That's unlikely to change. With the occupational market showing strong signs of recovery, investors are able to put strong assumptions on their cash flow modelling and are putting particularly aggressive bids on asset management opportunities. Large lot sizes are still dominated by overseas players. We can't see that changing. But in the 10 to £100 million range, there's a marked swing back to the UK players. Most notably the UK funds. There's a dozen or so bidding very aggressively against each other, and that's either for their own retail funds or for third-party mandates from overseas privates or institutions. There's little new stock anticipated to come to the market, and anything that is coming is going to be hotly contested, particularly, as I said, with those asset management opportunities. And over the quarter, we've seen yield floors been tested, with 3.75% in the core now becoming more common, and even in the fringes where institutions and privates have rarely ventured below 5%, yields in the falls are now incredibly common. Ironically, we could see a drop in turnover in the final quarter, and that's mainly down to a lack of supply and not certainly lack of demand. What's caused this? Well, for the last 5 years, we've been selling to long-term investors, and they're showing little or no appetite to trade on those assets. They're showing plenty of profit, but they're seeing how competitive the bidding environment is, and they don't wish to join those other buyers at the moment. We see this as a trend likely to continue.